So you mentioned earlier this the confluence of some of these inflationary forces and deflationary forces. And you, in preparing for the show, you mentioned this strategy that Trump is running. I don't know if you named it this or they're calling it this or what, but the fire and ice strategy that is related to this confluence of inflation and deflation. Could you tell us about what is that? What are the, I guess, obviously revisit the inflationary and deflationary forces, and what is it? What is the fire and ice strategy?
Yeah, I mean, it has the deflationary ice components to it and inflationary fire components to it. And I named it that, although there was a Morgan Stanley analyst like 20 years ago or something when he was looking at certain, inflationary aspects of the economy and deflationary going on at the same time, called it a fire and ice economy. So I think what Trump is running is a fire and ice geopolitical, geoeconomic strategy, where he's got a number of inflationary forces on the one hand that he wants to put in place to enact his vision, and a number of deflationary forces on the other. And then I think like a metaphor for it might be like, let's say you've got a pot that you've got at around 130 degrees or something, some logs underneath it. And you don't want it to get so hot that it boils over, but you don't want it to get too cold. And like, if someone starts adding logs to the fire, you can keep that temperature where you want if you add some ice to the pot. Or if somebody's adding ice to the pot, you can keep that temperature by adding logs to the fire. And I think he's trying to do this really delicate balance where he's got inflationary aspects, which are things like monetization of assets, like perhaps the nation's gold, keeping low interest rates. Besson, his Treasury Secretary, is really trying to keep the 10-year low, and I think they're going to be doing, Treasury actions in order to make that happen in reality. And actually, we've seen the 10-year bond lower every single week in yield since Trump took office. We've got, Doge stimulus checks being talked about. We've got tax cuts, and, tariffs could have one-time price increases. So we've got all those inflationary aspects on the one hand. And then he's also gunning full speed ahead with a bunch of deflationary things like deregulation. They really want to keep the oil price low. That's a big part of what I think is driving this desire for a Russia-Ukraine settlement. Wall Street Journal had an article out a couple weeks ago. Like, if that conflict gets settled, it could be a 5-10% decrease in global oil prices. There's, kind of Doge activities. Cutting the government size is very deflationary because of the fiscal impulse, which has been propelling the economy. And then lastly, you've got the whole AI automation thing going on, which is also deflationary. So you've got all of these things in the mix here, all these logs under the fire and all these ice cubes going in the pot. And the market is confused, like what's going to win out, what's going to happen. And I think what it is a very desperate, like thread the needle type strategy, but it's kind of a desperate times call for desperate measures. And so I think the writing has been on the wall that this monetary system is collapsing, the debt burden's unsustainable, the money printing's out of control. And I think the attempt is like, we're going to do all of these kind of inflationary things to kind of keep things propped up. But at the same time, we're going to be, unleashing, with deregulation, with bringing, actual manufacturing back to the U.S. and all these other things that can kind of create nominal GDP growth. A big component of that will be inflation. A big component will be real growth. And by that nominal growth, a hope to bring down, debt to GDP levels and things like that, which would either solve the problem or at least allow for the system to perpetuate. Because if something's not done, this whole thing, I really think it's like got a 4 or 5 year time frame before it just collapses. Wow. And the main reason for that, really quick, is just that is when the Social Security Trust Fund runs out. So
in 5 years.
Yeah.
Okay. So this is 2030.
Yeah. Okay. When it starts getting dangerously low. If you look at, so the government scores it every year, and they always push it back a couple of years. Like at one point it was going to be 2030, then it was going to be 2031, I looked at the most recent one. They're calling for 2033, and that was a recent pushback of a year. But then you read, well, why did it get pushed back? It's like, well, we changed the assumptions that less people were going to need disability. We changed so they're manipulating these assumptions, but I think the real number is about 5 years.
Yeah.
And when that happens, we're running, okay, the January monthly treasury report came out a couple weeks ago. We're running an $840 billion deficit so far, fiscal year 2025. That's in 4 months.
Wow.
October, November, December, and January, because fiscal year starts October 1 for the government. Jeez. 4 months, 840 billion. Last year at this time, it was like 510, 520, to like a 58% increase.
And has the Doge cuts have not taken effect?
They haven't taken effect, but there's no way for fiscal year 2025 we're not running a $2 trillion deficit. Right. We're going to blow out anything Biden did. We're just on this trajectory. Yeah. And even with Doge and saying they're laying off people, but you're going to get benefits and pay until when? September 30th, the end of the fiscal year. I think 2025, at least fiscal year 2025, anything that happens, the administration is going to be out there saying this is the Biden economy. And it's kind of like kitchen sinking a quarter for equities for a CEO of a company. They're basically front loading some bad news stuff into it. That's why they want a $4 trillion debt increase. Yeah. I mean, if they're going to be balancing the budget soon, why do they need it? So all these things are going on, and that's what we're in the midst of. And I think when we get to the other end of it, it could be very positive. But there's going to be this uncertainty and markets hate uncertainty. And that's why I think you're seeing some crazy stuff. You're seeing Bitcoin, you're seeing stock markets don't know what to do. You're seeing this happen. And I think that it could be spicy in this first half of the year. I think we could see things go down, in equity markets, 10, 30%. I think Bitcoin's very interesting where it's at right now. And Susan should talk all about where the Bitcoin price exactly is going to go, and who knows. But, I think there's just a lot of, money being moved, and all of those components are really what's driving this, and nobody knows exactly how it's going to shake out.
Thanks for watching. If you enjoyed this episode, click here to find more just like it, and here to find our most recent episode. Also, make sure to like this video to help shine light on the corruption of money, and be sure to subscribe to this channel to stay connected.